What just happened in the last 12 hours is something I've never seen in my entire career analyzing silver markets. We witnessed silver crash from $84 down to $79 in a matter of minutes right after the Supreme Court decision dropped. And then, get this, it rocketed back up to $84 within hours. This isn't normal price action. This isn't even manipulation in the traditional sense. What we're watching right now is physical silver crushing the paper markets, and if you're not paying attention to what I'm about to show you, you're going to miss the biggest move in precious metals history. Let's dive into the data because the numbers don't lie, and what they're telling us is absolutely mind-blowing. So let me set the scene for you. Over the past 48 hours, we've been trading in a relatively tight range between $82 and $84. The market was consolidating, waiting for something, and that something turned out to be the Supreme Court decision that dropped early this morning Eastern Time. Now, I'm not going to get into the political details of the decision itself, because frankly, that's not what moves markets long-term. What matters is how the algorithms reacted. The moment that news hit the wires, we saw an immediate algorithmic dump. Silver got hammered down to $79 in less than 20 minutes. It was violent, it was swift, and it caught a lot of retail traders off guard. Stop losses were triggered across the board. Margin calls went out. Panic selling ensued. But here's what they don't want you to know. While paper silver was getting destroyed on the COMEX, physical silver demand exploded. I started getting messages from dealers within minutes of that dump. Premiums on physical silver eagles jumped from $9 over spot to $14 over spot in some markets. That's a $5 premium increase in under 30 minutes. Think about that. The paper price is collapsing, but physical buyers are stepping in so aggressively that dealers can't keep up with demand. This is the divergence we've been talking about for months, and it's now happening in real time, right in front of our eyes. The spread between paper and physical has never been wider, and that tells you everything you need to know about where the real market is. Now, what happened next is even more interesting. After hitting that $79 low, silver didn't stay down. Within 2 hours, we rallied straight back to $84. That's a $5 move to the upside in 120 minutes. Let me repeat that because it's critical. $5 in 2 hours. That kind of violent reversal doesn't happen unless there's massive buying pressure underneath the surface. And when I looked at the data, when I looked at what was happening in the registered silver vaults at the COMEX, when I looked at the Shanghai premiums, everything confirmed what I suspected. Physical silver is absolutely crushing the paper market right now, and the people trying to suppress this price are losing control. Let's talk numbers because this is where it gets really interesting. As of yesterday's COMEX Vault report, registered silver, that's the silver that's actually available for delivery, sits at just under 23 million ounces. Now compare that to where we were 6 months ago when we had over 70 million ounces in registered. We've lost 2/3 of the registered silver in the COMEX vaults in half a year, 2/3, and the drain is accelerating. In the last week alone, we've seen another 800,000 ounces move out of registered. That's not a small number when you're already sitting at critically low levels. Show chart, COMEX registered silver historical data. Here's what makes this even more explosive. Open interest on the COMEX for silver futures is still sitting at around 140,000 contracts. Each contract represents 5,000 ounces. Do the math with me. That's 700 million ounces of paper silver claims against just 23 million ounces of registered physical. That's a ratio of over 30 to 1. 30 paper claims for every 1 ounce of actual deliverable silver. Now, under normal circumstances, most of those contracts get rolled forward or cash settled. But what happens when people start standing for delivery? What happens when physical demand is so strong that people actually want the metal, not the cash? That's exactly what we're starting to see. Delivery notices for March are already running higher than the previous 3 months combined. We're seeing industrial users, we're seeing foreign banks, we're seeing wealthy individuals all stepping in and saying, I don't want your paper anymore. Give me the physical metal. And the COMEX is struggling to meet that demand. This is why we're seeing these wild price swings. Every time the paper market tries to push the price down, physical buyers step in immediately and absorb everything. Then, when they try to cover their short positions, there's no liquidity on the upside, so price explodes higher. Show chart, COMEX silver deliveries month over month. Now let's talk about what happened during that SCOTUS dump this morning. When silver hit $79, I went straight to my dealer contacts. I called 3 of the largest bullion dealers in North America, and every single one told me the same thing. Their phones were ringing off the hook. People were buying. They weren't selling. Retail investors saw that dip and immediately treated it as a buying opportunity. One dealer told me he moved over 15,000 ounces in the first hour after that drop. 15,000 ounces. And these weren't small retail orders. These were serious buyers coming in with 5-figure and 6-figure orders saying, if they're going to give me silver at $79, I'm backing up the truck. This is the mentality shift we've been waiting for. For years, decades even, when silver got hit, retail would panic and sell. But not anymore. The market has matured. People understand what's happening. They understand that these algorithmic dumps are nothing more than opportunities to accumulate physical metal at a discount. And the data proves it. Every single dump over the last 6 weeks has been bought within hours, every single one. The dip buyers are in full control now, and the paper market manipulators are running out of ammunition. Let's also talk about Shanghai premiums, because this is a key indicator that not enough people are watching. Right now, the premium for physical silver in Shanghai is running at $12 over the COMEX spot price. $12. That means Chinese buyers are willing to pay $96 per ounce for silver when the paper market is quoting $84. Why? Because they can't get physical anywhere else. The Chinese government has essentially cut off exports of silver from their country. They're hoarding it. They know what's coming. They know that silver is not just a monetary metal, it's an industrial metal critical for green energy, for solar panels, for electric vehicles, for military applications, and they're positioning themselves to control the supply. Show chart, Shanghai silver premium versus COMEX spot. Here's what you need to understand. China is the world's largest producer of silver, but they're also the world's largest consumer. They produce about 115 million ounces per year, but they consume over 200 million ounces annually. That means they're a net importer despite being the largest producer. And now, with their domestic demand skyrocketing and their policy to hoard strategic metals, they're pulling supply off the global market. This is creating a massive shortage everywhere else, and it's one of the primary drivers behind these insane premiums we're seeing. Now, I want to address something that I've been getting a lot of questions about in the comments. People ask me, John, if physical demand is so strong, why does the price keep getting smashed on the COMEX? Why don't we just go straight up? And it's a great question. The answer is that the paper market still has control over price discovery in the short term. Banks and hedge funds can print infinite paper contracts. They don't need to own the physical metal to sell silver futures. They just need margin, and as long as they have access to liquidity and margin, they can suppress the price temporarily. But, and this is the key word, temporarily. What's different now compared to 2011 or 2020 is that the physical market is fighting back. When they slam the price down, physical buyers immediately step in and drain the vaults. This creates a feedback loop. The lower the paper price goes, the more physical gets bought. The more physical gets bought, the less is available for delivery. The less available for delivery, the harder it becomes to suppress the price. Eventually, the paper market loses credibility entirely, and price discovery shifts to the physical market. We're not there yet, but we're getting close. Very close. Let me give you another data point that should concern anyone who's short silver right now. Silver ETFs, specifically SLV and PSLV, have seen net inflows of over $60 million in the last 7 trading days. 60 million. That's institutional money. That's not retail. Retail doesn't move that kind of capital. This is hedge funds, family offices, sovereign wealth funds starting to position themselves in silver. They see what's coming. They see the supply squeeze. They see the demand from green energy and industrial applications, and they're getting ahead of the curve. Show chart, SLV and PSLV inflows last 30 days. And if you think the short sellers are comfortable right now, think again. The cost to borrow silver for shorting has spiked to its highest level since 2021. It's now costing over 8% annualized to maintain a short position in silver. That's not sustainable. If you're a hedge fund or a bank that's massively short silver, you're bleeding money every single day, the price doesn't collapse. And with physical demand, this strong collapse isn't coming. What's coming is a short squeeze of epic proportions. All right, let's switch gears and talk technical levels, because whether you're trading futures, whether you're buying physical, or whether you're just trying to understand where this market is headed next, you need to know the key levels we're watching. Right now, silver is trading at $84. We tested $79 this morning during that SCOTUS dump, and that level held like concrete. $79 is now confirmed as our short-term support. Every time we've touched that level over the past 3 days, buyers have stepped in immediately. That tells me there's massive buying interest between $78 and $80. Show chart, silver 4-hour time frame with support resistance levels. On the upside, our immediate resistance is sitting at 86.50. We tested that level twice last week and got rejected both times. If we break through 86.50 with volume, the next major resistance isn't until $92. And above 92, we're in price discovery mode. There's nothing stopping us from running to 100 or even higher. The breakout above $80 was the key technical signal, and we've now held that level on multiple retests. This is exactly the kind of price action you want to see in a bull market. Higher lows, consolidation, then continuation higher. Now let's talk about momentum indicators because they're flashing some really interesting signals right now. The RSI on the daily chart is sitting at 62. That's not overbought. We've got room to run higher before we hit overbought territory, which is typically around 70 or above. The MACD just crossed bullish 2 days ago, and the histogram is expanding. That's a strong momentum signal that tells us buyers are in control, and the moving averages are stacking perfectly. The 50-day is above the 200-day, and price is trading above both. This is a textbook bullish setup. Show chart. Silver daily chart with RSI and MACD. Volume is another key factor we need to discuss. During that dump this morning, volume spiked to its highest level in 2 weeks. But here's the interesting part. The volume on the reversal back to 84 was even higher. That tells you that the buying pressure exceeded the selling pressure. More participants were willing to step in and buy the dip than were willing to sell. That's bullish. That's exactly what you want to see during a correction in an uptrend. If you're looking at this from a swing trading perspective, here's my take. If you're long, you hold. You don't sell into strength when the fundamentals are this bullish and the technicals are this strong. Your stop loss should be below $78. If we break 78, that would be a concerning development and would suggest a deeper correction is coming. But as long as we hold above 78, this bull market is intact. On the other hand, if you're looking for an entry, wait for a pullback to 81 or 82. Don't chase the breakout here at 84. Let the market come to you. Now, I want to talk about a pattern that I'm seeing on the weekly chart that has me extremely bullish for the next 3 to 6 months. We're forming what looks like a cup and handle pattern on the weekly time frame. The cup formed between 2020 and 2024 with the high at $50 in 2020 and the retest of that level in 2024. The handle is what we're forming right now. If we break out above $90, which is the rim of the cup, the measured move target takes us to $140. Now, I'm not saying we're going to hit 140 tomorrow or even next month, but over the next 6 to 12 months, that's absolutely on the table if this pattern plays out. Show chart. Silver weekly chart. Cup and handle pattern. Here's another technical signal that's getting me excited. The Bollinger Bands on the weekly chart are starting to squeeze. For those of you who don't know, a Bollinger Band squeeze happens when volatility contracts and price consolidates. It's often followed by a massive expansion move. And when you see a squeeze on a weekly time frame, the move that follows is usually significant. We could be looking at a $10 to $20 move in a very short period of time once this squeeze resolves. And based on the fundamentals, based on the physical demand, I think that move is going to be to the upside. So where do I think we're headed from here? Let me be very clear about my outlook because I don't want there to be any confusion. Short term, over the next week to 2 weeks, I think we consolidate between $80 and $86. We're going to chop around, we're going to test support, we're going to test resistance, and we're going to frustrate a lot of traders. But that consolidation is healthy. It's necessary to build the energy for the next leg higher. I'm watching the $81 to $82 zone very closely as a potential re-entry point for anyone looking to add to their position. Medium term, over the next 1 to 3 months, I think we break through $86.50 and make a run at $92 to $95. The fundamentals support that move. The supply squeeze is real. The COMEX vaults are draining. Physical premiums are skyrocketing. And institutional money is starting to flow into the sector. All of those factors point to higher prices. The only thing that could derail this would be a major risk-off event in the broader markets, something like a stock market crash or a credit crisis that forces liquidation across all asset classes. But even if that happens, I think silver recovers faster than anything else because of the supply dynamics. Long term, over the next 6 to 12 months, I'm looking at $120 to $150. I know that sounds crazy to some people. I know there are going to be comments saying I'm overly bullish or that I'm pumping silver. But look at the data. Look at the supply and demand fundamentals. Global silver production is flat to declining. Global silver demand is increasing at double-digit rates because of solar, electric vehicles, and 5G infrastructure. Inventories are at multi-decade lows, and the paper market is losing control. When you put all of that together, $150 silver is not only possible, it's probable. So here's the bottom line. What we witnessed today with that wild reversal from $79 to $84 is not random. It's not noise. It's physical silver crushing the paper market. It's the free market fighting back against decades of manipulation. And it's a signal that we're entering a new phase in this bull market where the fundamentals matter more than the algorithms. If you're holding physical silver, don't let short-term volatility shake you out. If you're looking to enter, wait for a pullback and use it as an opportunity. And if you're short, honestly, you need to reconsider your position because the risk-reward is heavily skewed against you right now. What do you think will happen? Are we going to $100 by summer, or do you think we'll see another major correction first? Drop your price predictions in the comments below. I read every single one, and I love hearing your perspectives. If you found this analysis valuable, if it helped you understand what's really happening in the silver market, smash that like button. It helps the algorithm push this video to more people who need to see it. And if you haven't already, subscribe and hit that notification bell because these markets move fast, and I'm bringing you updates every single day. I'll see you in the next one. Stay sharp, stay informed, and keep stacking.